Welcome to Level 1, Lesson 5. My name is RIA the Trader from TradingWing.net. In this lesson, you will learn a little bit about the difference between fundamental and technical analysis. So let's get started. What exactly are these two? Both fundamental and technical analysis are the two main schools of thought used in the stock market. Both schools complement each other but can serve as counterintuitive at times. For example, a fundamental analyst may use quantitative data and find that a publicly traded company has more room for growth and therefore is a great investment. A technical analyst may use comparative analysis and find the opposite to be true. Therefore, both schools may serve as counterintuitive. However, most profitable investors and traders use both to research and forecast future stock prices. Like other forms of philosophy, each school has their own advocates, but also adversaries. Looking at the images provided below, on the left-hand side, you will see something technical analysts are more familiar with. On the right side, you will see an image that fundamental analysts are more familiar with. Let's look a little bit more into fundamental analysis. Fundamental analysis, also known as FA, is a form of quantitative analysis, which means using mathematical and statistical measurement and research to understand the behavior of a stock. Fundamental analysts evaluate stocks by attempting to measure their intrinsic value. They do so by studying the economy and conditions of a particular market sector to determine the financial strength of a company. For example, if a fundamental analyst was looking at a specific company, they may compare it to other companies within the same sector. If it is doing better than most, that may pique the interest of a fundamental analyst. Some critical information that FA uses are company earnings, expenses, assets, and liabilities. Now let's look at technical analysis. Technical analysis is a form of comparative analysis. This is the process of looking at current trends in order to predict future trends, better known as trend analysis. Technical analysts do not evaluate a company's intrinsic value. Instead, stock charts are used to identify patterns and trends. A technical analyst may evaluate changes and movement in a stock price and volume. A pro of technical analysis, which some fundamental analysts may see as a con, is that TA assumes that fundamental information is factored into the price. And that concludes this lesson.